Well, good morning, everyone. Again, happy Tuesday. Excited to be with you all. To begin with, just a couple of quick ground rules. We hope that you take space and make space. Please share your perspectives as well as learn from each other. One of the benefits of these sessions is how much founders are connecting and supporting other founders that they met through these conversations. And I guess at a high level, why we're doing this, the short answer is we've heard from folks and we even experienced it ourselves. There's not a lack of information on the internet, but there's often, and then there's not a lack of GPT responses, but oftentimes you just want to connect with a person and ask a question if you have a specific one, or just connect with other like-minded individuals, in this case, other early stage founders. And so this is our attempt to build that community with folks. And the first half, we like to focus on a different topic. So we will talk about investment memos with a specific focus on our investment memo. And then the second half, more or less, will be focused on Q&A. We will kick off the introductions with Eileen and then Waverly.
Hi, everyone. Great to be here and excited to see everyone's faces. I'm Eileen Kim. I'm the platform manager at Slauson Co. So I work most closely with the founders that we've already invested in. And yeah, just excited to be here and see where I can support. And I'll pass it over to Waverly.
Thanks, Eileen. Good morning, everybody. I'm Waverly. I'm an investment associate with Slauson. So really helping to support a lot of our pre-investment efforts. So speaking with founders and getting to evaluate them for potential investment. So thank you all for being here this morning.
Awesome. And then I will quickly introduce myself and Slauson. So my name is Jesús. I'm a principal with the firm, leading up the majority of our pre-investment efforts, and have been in venture since about 2018 with Slauson, over 2.5 years now. On the Slauson Co side, really briefly, we're a pre-seed and seed stage firm rooted in economic inclusion. We're a $75 million fund one, but we're also raising our second fund right now, looking for $100 million. So we too are on the fundraising side. If founders are raising money, and funds have to raise money as well. At a high level, again, we have 38 portfolio companies. Our B2B thesis tends to focus on tools supporting small business owners. And then on the consumer side, we'd like to focus on companies building platforms and products serving overlooked customers. We typically lead deals investing anywhere between $250K up to $2 million, typically looking for 10 to 15% ownership on average. And the secret, not so secret sauce, comes across in our name. So Slauson is a prominent thoroughfare in Los Angeles, cuts across culturally rich but systemically disenfranchised communities, cutting into one of the wealthiest communities of color in the nation. So we like to use the analogy of the street connecting the journey that the street takes to be representative of the journey, wealth creation journey that we hope for our founders, their teams, their employees, et cetera. And we hope to accomplish that with the second part of our name, the & Co, which we refer to as the company we keep. This includes a number of mission and vision aligned folks like our investors. So we're fortunate enough to have some of the big techs, Google, Meta, PayPal, et cetera, late stage venture capital firms, notable individual VC venture capitalists, artists, operators, and founders who are all excited about supporting our founders whenever they have a challenge that they can support with, or an intro that they need. We're a team of 10, primarily based in Los Angeles. The outlier, I live in the Bay Area. But with that, I'm going to share my screen. In terms of an agenda, we'll do quick intros. We'll talk about the investment memo, which again is the focus of the first half of the conversation. We'll share a little bit about our investment process, go deeper into our memo, share a couple of high-level thoughts and considerations, and then we'll open it up to Q&A. At this point, it doesn't have to be tied to investment memos, can be whatever is top of mind. And I know a few of you shared a couple of questions as you registered for this. So diving in for the next 15-20 minutes or so, at a high level, we'll discuss what an investment memo is. So if you think about fundraising, if you will, typically the most common tool that you have as a founder, and specifically generally talking about venture-backed companies, is a pitch deck. And a pitch deck, you ideally want it to be quite succinct, quite catchy, quite visual, whereas an investment memo is something that typically investment firms will use as a way to document all that they are learning about the company in order to make an investment decision. I think the majority of investment firms use some flavor of an investment memo. Some might have a different format. Some might even use slides or tables or things of that nature. But everyone, generally speaking, has some sort of way to document and collect all of the data that they are amassing over the numerous conversations and points of interaction, and ultimately to present to the rest of their team the opportunity and see if it is one that they all want to get behind and ultimately invest in. Sometimes I have seen that investors share the investment memo with other investors as a way to get them interested in also investing. Typically, if you're looking for like a co-lead, or if you're looking for an additional amount to finish out the round, you might share that. I've also started seeing in recent years that founders themselves have an investment memo. And so this is unique because founders say, hey, I know you're going to write this up for me. Let me almost do the work for you, even though, you know, that's our job. But the benefits is that you own the narrative. You're saying, hey, I know you're going to do this on me. Let me do it for you. And this is what you should be writing. And so we take that, you know, we know there's a little bit of bias whenever we get an investment memo from a founder, but nonetheless, and I'll get into this in one of my later points, I think it's a helpful exercise for you as a founder to put an investor hat on and say, hey, what is the merits of this business? And not necessarily, and for the reason of we as investors are comparing, I like to say, apples to oranges to Oreos in terms of companies that we're evaluating. So you're really trying to make the case in written format of why your company is a standout company and should be invested in, outside of the dozens and hundreds and thousands of other companies that we're typically seeing. Whenever an investment firm is going to write up an investment memo, generally speaking, they need as much information as possible. And so whenever they are about to do that or are planning on doing that, they typically will ask for that information. The most common way to ask for that is typically what's called a data room. Data room is just a fancy word for like a place to have documents. So it can be on Dropbox, on Google Drive, on DocSend, etc. But it's a way to organize and have as much information that you're willing and able to share with the investors as possible. And so highlighted a couple of different things that we like to see whenever we ask for this. So a couple of things: a financial model, a product roadmap, competitive analysis, hiring roadmap, references, etc. And so we could have a separate conversation about the data room in and of itself. The one thing I will say, because we look at both pre-seed and seed companies, as well as we have an accelerator called Friends and Family, we see companies at all different stages: pre-product, pre-revenue, post-product, number, you name all the combinations. We see them, and so we understand somebody who's a pre-seed company, their data room is going to be vastly different than a seed company. That said, it always is in your best interest as a founder to have the data room as exhaustive as possible and organized, so that you're setting up a strong foundation whenever you're getting to know an investor and seeing if it might be a good fit, the company to fit in their portfolio. Okay, well, we'll keep it moving if there aren't any immediate questions, and we'll get deeper into our specific investment memo. And to begin, want to put it in context into our investment process. So here is our investment process, and I'll quickly go over this, but I want to focus particularly on the diligence, which is where we are internally doing our investment memo. So typically, once we have received as much information, typically at a minimum, a pitch deck from a founder, the best place to reach out to us is through our website. Our investment team reviews everything that comes in through it, and we respond in as timely of a manner as possible. We can drop in the link to that in the chat. But we review the information that we have on a company to assess if we think that there is a strategic fit to merit the conversation. We want to be mindful of both the founder's time and our time. And so once we do agree to that conversation, we have an initial meeting that's typically a combination of Waverly and myself, or myself and another team member. And then post that conversation, we have typically Monday morning investment pipeline meetings. That's where we're talking about all companies that we are connecting with and discussing them as a team, pretty much the entire firm. And post that discussion, if we still see alignment, we schedule a call with each of our managing partners. There's two of them. And so this is the second and third meeting. Again, after each of those meetings, we come back on that Monday morning conversation to regroup and reassess. And then it's after that third meeting that we get into this stage called diligence. And again, every firm does diligence differently. For us, this is where we're going to formally ask for your data room if we haven't already. This is where we're going to start writing the investment memo. And then a number of other events kick off as well, in terms of hopefully trying to meet in person, introducing you to our platform team, references, et cetera, customer interviews where applicable. But this diligence phase is probably the most nebulous in terms of investment firm to investment firm. But then ultimately you get to this process, and a firm can do as much diligence as they want or need. It's generally speaking in both parties' best, mainly in the founder's best interest, to kind of ask how long is your process. And so we aim for our process to take between 4 to 6 weeks, so that you have a rough understanding of, okay, where am I in this firm's state process or funnel. And then once that is all complete, we extend an offer, or we don't, and we explain why we are choosing not to invest. Feel free to also type your questions if that's easier. So now this is, again, our version of an investment memo. This is what we tend to focus on and include whenever we are engaging with the company that we've been, again, having 3 to 4 conversations with at this point. And we feel like there is enough there for us to dig in further. And so this is a document, it's a Word document, and the beginning part of the memo is really a summary of the opportunity. Is trying to put in a couple of paragraphs what the company does, what inflection point it's currently at, why we feel like there's alignment between us and the firm. One of the questions that we always ask in most of our conversations is what the founder is looking for from investors outside of the capital itself. And we actually listen to that and pay attention, because we want to make sure that that's something that we can provide via our platform, via our expertise, etc. So after that, a lot of these sections are somewhat common sense, if you will, in terms of trying to assess the overall opportunity. But to begin, we look at the market. We try to understand what sector or sectors or industries is this company operating in. Is it growing? How big is it? Are there any favorable macroeconomic conditions within the economy, within legislation, within regulation that are happening? Any immediate changes that have happened that are good for this company and what they're building? Next is a competitive landscape. Try to assess, how is this a very crowded space, or hey, actually there's only a handful of competitors and they're also very small, so there's an opportunity to grab a lot of market share, assuming that it's a large market. So these two sections, the market condition and competitive landscape, kind of tell a story. Is it a big market? Is it a small market? Is it a lot of players? Is it a small amount of players? So on. And those competitors, primarily the closest competitors, why are they differentiated from the company that we're looking at? Next, we get into the product. So this is where we try to understand what the product is, what it does, where it's at currently, and what's the plans for the next, call it 6 to 12 months. What are you planning on building? Hopefully at this point, depending on where you are in the stage of the company, you have a demo, or you even have users where we can use it ourselves, or where we can talk to some of your users or customers to understand their experience. And then next, to get into the financials, a business has to generate revenue in some way, shape, or form. And so we try to understand what are the different ways that it does so. What are the different go-to-market strategies? What are the projections for the future? This is where, especially if it's a pre-revenue company, the projections can, I mean, oftentimes they're just, you have no strong foundation for what to put in the financial model if you're pre-revenue. However, it does help understand at least the cost structure of the company. And that is one thing that you can control as a founder, what cost, what you're spending on, because ultimately, if you run out of money, you have to close your business. And so managing costs is very important. On the projection revenue side, we want to understand the revenue drivers. How are you, not just how are you generating revenue, but what are the different inflection points that you see in the company? Are you going to grow city by city? Are you going to grow by product, so on and so forth? And then ultimately, it's a quick way to assess the scale of the business. Is this company wanting to reach 50 million, $100 million in revenue in the next 5 to 7, 8 years, or are they trying to have even greater ambitions than that? And how likely is that? Or are they trying to create a smaller business? Which again, none of those are good or bad. It's just more of us understanding what the vision is. So again, running through these, the next one probably is the most important, particularly if you are pre-revenue, even if pre-product. Team. So we try to understand, and hopefully we've been getting to know the team quite intimately over the past few weeks, months, if we didn't already have a pre-established relationship, but try to highlight the different core team members, what their backgrounds are, what their roles are, titles, etc. And then also typically whenever a company is fundraising, they're gonna hire talent with it. So understand what are the different roles that they're going to be hiring for, where are they in the process of identifying potential candidates for those roles, etc. Then on the right side, try to highlight the terms. And so this is where we list out the details of how much they're trying to fundraise, what would be a potential investment from us, other investors, their involvement, if there's any board seats, etc. And then we try to, as we're doing all of this investment memo, try to highlight and see what are the risks associated with this company. No business is without risks, but for us, it's really trying to highlight what could stop or prevent this company from reaching their next milestone in the company's journey, which if you are raising venture capital, typically that looks like raising another round of capital in 12 to 18 months. And so what are the reasons that we think this company might not be able to do that? And we try to list those out, as well as potentially what are some of the mitigating factors that could help make these risks less of a risk if we were to partner with the company in an investment capacity. And then we throw a lot of things in the appendix. So we like to do reference calls, whether that's personal reference calls or even customer reference calls if you do have customers. And we link out to all of the different materials, the data room that was shared with us, and so on and so forth. So this is a super high level what an investment memo is. If my colleagues have any comments they want to share, they can. If anyone has any questions, please feel free to, again, raise your hand or come off mute. That's easier.
I have a question. As a founder, you're trying to ensure that you're getting as much investment, well, not as much, but that you're trying to get investment into your company, potentially from multiple areas. Going back to something you referenced within the deal terms, how do you look at it, especially if you may have, a couple different investors, like maybe it is other VCs or angel investors? Does that impact, the story that you would present as you're looking at getting funding from other places? Like, how do you potentially approach that?
Yeah, thank you for the question. So It's helpful to understand, well, to begin with, if you've made it to our investment memo stage, it's likely that you fall into our year of fit stage-wise, meaning we have an opportunity to hit our target ownership, which typically, again, is 10 to 15%. If you haven't, then it would be a slightly different process, which is if we're only going to put in a small check, which we don't normally do, that's not really our primary focus. But that would be a more abbreviated version if there's already a lead and for whatever reason the deal came to us late in its fundraising process, but we're still very interested in investing. We might potentially still invest, but low likelihood, and that would be a much more abbreviated version. And probably your lead or co-lead investors will have shared information with us to help expedite our process. So those are more ad hoc, one-off instances. For us, if you got into this stage of investment memo, we know that there is a large likelihood that we will probably be the lead or co-lead of the deal. What that just technically means is you're investing the majority of the capital. There's not a lead typically also means that you're issuing a term sheet, meaning you're setting the terms, which includes the valuation, the discount, option pools, etc. There's another nuance here, which I'm glancing over in terms of the round itself. Is it the instrument? Are you raising on a safe? Are you raising a priced round? Are you raising a convertible note? Again, those different instruments could be a whole nother conversation. But typically, to answer your question, for us, we want to understand what the round dynamics are to our knowledge. I mean, founders, if I'm sitting in your seat, you want to get as much money as fast as possible. So, we're trying to be cognizant of that as well. That's why we're not trying to waste anyone's time and trying to be as efficient and effective as possible in our process. But if you're talking to us and we're diligencing your company and you say, hey, I actually have another investor that wants to take the majority of the round. I mean, that's good because that means that somebody wants to invest in the company, and then we will take that into consideration and adjust our process accordingly. But again, generally speaking, for us as a firm, this is where we're going to be able to lead or co-lead. And again, that just mainly means putting the bulk 50 to 75% of the investment. So we're not anti having other investors, so long as it fits with those different criteria. Okay, well, we'll get into the last slide on this topic, just with a couple of high-level thoughts and considerations. So, I mean, to your question, Niara, the first bullet here touches on that a little bit. Ideally, whenever you are talking to different investors, you are asking, if they haven't shared, you're asking them, hey, what are your average checks? Do you have target ownership? Do you take board seats? What is your investment process? A little bit about what I've been sharing throughout this call. Hopefully you have an understanding, or they've shared that, so you can understand, is this a firm that makes sense? For example, maybe you want, you can ask, what kind of investor, how active of an investor are you? And maybe they say, hey, look, we're just a check. We don't like to get involved. And maybe you're looking for somebody who's going to be super involved. And so asking those questions, if they haven't shared, especially their investment process, because it's, for better or for worse, an investment firm, it can take a long time with their diligence if there's no reason to move fast. And so from a founder perspective, it behooves you to run as effective and efficient of a process so that all investors can move quickly, but can move in a way that doesn't leave you hanging and they're doing diligence for months and months and months, which unfortunately can happen. And so that's why you want to consolidate your process, run an effective process, which means being organized, being structured. This is what we work with our founders once we've invested a lot on pitching. It doesn't get, even if you raise a pre-seed, the seed isn't going to get easier. It just changes. There's more data. There's the stories, just you've pivoted potentially. The team has grown. So the story changes, the company changes, and it doesn't get easier. It's just different. But you want to understand what that process is, just so you can have a little bit of clarity there. Again, the second point I touched on, you want to stay organized. You would be surprised. I'd say probably half of the founders that we engage with have some sort of data room. It's not super common. And again, I don't want you spending, I also don't want you thinking that if you have the best data room ever in the world, you're going to get funded. The business also has to be interesting and growing and all the other things. But it'll hurt you more if you don't have your information together, because one, that doesn't send a good signal to the investment firm. Like if you're unresponsive, or if you're just kind of have documents that aren't really structured, that's a reflection of you and the quality of the business and whatnot. So you want to have all of that squared away before you start fundraising as much as possible. And again, the last bullet is you want to put yourself in the investor's shoes, or put your investor hat on for a little bit, whether you're writing your own investment memo or not. But you really want to think about, okay, if I'm an investor, I know they're going to be thinking about all of these different things. How do I frame my narrative? How do I frame the information that I'm going to give to them in a way that is going to empower them to get educated on what I'm building, why it's very interesting and worthwhile for them to invest in. And hopefully by doing all of that, you're able to successfully fundraise. And again, the investment memo for the firm just becomes a tool to document the conversations, the data, and consolidate it to inform that, yes, we want to invest, or for whatever reason we don't. And that's the conclusion. So again, I'll take another quick pause here and see what questions anyone has on anything that we've shared so far.
Hi, good morning.
Morning.
Hey, quick question. So I'm not sure if I missed this or not. How do we submit to Slauson Co? Do you have like an RFP cycle? How does it work?
Yeah, we can share the link in the chat, but it's basically on our website. We ask for a couple of questions, and then our investment team reviews everything and gets back to folks in a timely manner.
Okay, thank you.
Yeah, thank you.
I'm not sure if this is the right forum, but are there specific geographies or technologies or business models that are more attractive to your investment thesis?
For Slauson Co, so at a high level, our primary theses on the B2B side is SMB tech. So how we define that as tools that support the next generation of small business owners. We can actually drop a deck in here in the chat, Waverly or Eileen, if you don't mind helping me out there, that shows a little bit more about our investment theses. In terms of like what is a good match, if you will. I mean, we're open to consider different companies, but again, we tend to skew towards companies that are building tools that support small and medium businesses, versus companies that are trying to build tools or platforms for enterprise companies, call it Fortune 50, Fortune 500 companies. There's a lot of venture capital firms that squarely focus on that, which is great. We think that there's opportunities in not doing that. On the consumer side, we're pretty open as well. I'd say there's a couple of hard lines that we don't touch in terms of we can't invest in alcohol, in tobacco, a couple of maybe obvious things that we can't invest in. And in business models, we're open. Of our 38 portfolio companies, that you can see on our platform, some aren't disclosed, but we have a wide range of a few CPG companies. We have one physical location, one company that has a physical location called Press Roots, is a dry bar for women with textured hair. And so we're open to letting the founders educate us on why there's an opportunity in their respective areas. And then outside of that, more on the mechanics, typically, whenever we see a company, they have not raised more than about $2 to $3 million. If they've raised more than that, then from an ownership and dilution standpoint, it doesn't make a ton of sense potentially to engage. unless there's some unique situation the company is going through. And then in terms of how we like to get involved, we're typically pretty hands-on. We have a platform team for a reason. We try to activate all of our resources. And so we like whenever a founder is looking for that sort of, we like to call ourselves somewhere between a coach and a cheerleader. And so we take a board observer seat. And so if a founder is looking for that sort of working relationship, then it tends to be a good match. In terms of geographies, it's across the US. So we're not geography specific. We don't invest outside of the US. And I'm trying to think if there's anything else. Waverly, Eileen, anything else that we should mention?
That's perfect. Thank you. Appreciate it.
Thank you.
Hi, Jesus. Can I ask you a question?
Sure, please.
Yeah. So can you talk more about the remains of the fund and how much investments are you planning to make per month or, well, for this year? Thanks.
Yeah. So we are deploying capital out of our first fund, which is $75 million. 40% of that fund is reserved for follow-on capital for us to continue supporting the company and investing throughout other subsequent fundraising rounds. Of that amount, we have about another one investment to make from that fund. However, we've already done a first close on our second fund, which we're looking to do $100 million on for the fund 2, and we have capital to deploy from the second fund. So from a founder perspective, it doesn't really matter if you're getting money from fund 1 or fund 2, generally speaking. That said, we have capital from both funds to deploy. And then we also have an accelerator, which I briefly mentioned, called Friends and Family. We're actually selecting companies this week. Those companies receive $150K in exchange for 5% ownership. And we're doing the cohort this year from starting in March. And in terms of the number of investments that we make, to answer your question as well, we typically make between 10 to 12 investments from our core fund. So I think I hit on your questions there. I'm seeing your question, Chloe. Is the accelerator open to apply at the moment? No, but if you have, we can also, I think, put in the Friends and Family website. But if you sign up for submit your information on the Friends and Family website or on our website, we can make sure to collect your information to share the details for the next cohort. The application period was September to October of last year, and it'll probably be a similar timeline this year for next year's cohort. So with that, I know we have less than 20 minutes left. I'm happy to stop sharing my screen and keep it more conversational and go with any questions that are top of mind for anybody. Doesn't have to be investment memo related, can be anything else that's top of mind for you at this moment.
Question, I'm hopefully not stepping on anybody. I've heard a lot of conversations and articles about the investment environment because of, the economy. Can you just say anything from your perspective in terms of, are things easier, harder, same as they were a year, 2 years ago?
Yeah, sure. And then Charlene, I'll get you next. So I will say that from a venture capital perspective, and specifically even more an early stage investment perspective, that's the vantage point that I'm going to share, because you talk to a late stage investor, they'll have a different perspective. Or if you talk to a public equities investor, they have a different perspective. So I'll just give you quick anecdotal data points. When I first started investing in with Slauson in 2021, the environment with interest rates being the lowest that they've ever been, the investment landscape was crazy, to say the least, in terms of the number of companies that were being funded, the timelines with which they were being funded, the diligence, if any, that was being done to invest in them. So it was a little bit of the wild, wild west. In a positive way for the founders, it was very founder friendly. However, we're seeing a lot of the aftermath of that, more or less second half of last year, in terms of a lot of companies were funded that potentially should not have been funded, or maybe they were funded. I won't get into the reasons because depending on how much you've been following the market, there's been a record number of company closures. And I think that's a little bit of the result of what we saw in 2021. Now, last year was a bit of a correction in terms of capital deployment. The number of deals, the number of dollars went down drastically, significantly. That's also as a result of interest rates going up. A bit pulling the layers back there. If interest rates going up from an investor standpoint, us raising our own funds, our investors called limited partners, they get more interested in other asset classes that are potentially going to generate more return or a more secure return. So, for example, credit facilities or credit products were being looked at more interestingly than they were in prior years, because again, those products were more interesting than venture capital because of what's happening in the macroeconomic environment with interest rates. So all that to say, last year also there wasn't a lot of IPOs, which has ripple effects through the private investment landscape. So all that to say, this year, looking ahead, I think that my hope and my thoughts is that it won't be as bad as last year was. There are a couple of hopefully marquee IPOs that we will see from companies that have been waiting to go public. Interest rates seem to be stabilizing, and I think there's talk about potentially a decrease. And so while that is very removed from us in terms of pre-seed and seed, I mean, our companies won't get to IPO or acquisition stage until 5 or 8 years from now. That has an impact because if the IPO market is good, then late stage investing is good, then early stage investing is good, because we need there to be follow-on investment in the companies that we invest in. So all that to say, it seems that the different factors in the market are such that this year will be better than last year. I don't think and don't suspect that it will ever get back to 2021 levels. And again, that's a good or a bad thing. We can debate that, but I think things are much more stable. I think that we're able to diligence much more thoughtfully, and vice versa. Investor founders can really get to know us or different investment firms and figure out if they're good matches. So yeah, can't give you any hard numbers, but that's my overall high level thoughts.
Very comprehensive. Thank you.
Okay. Mine is much more personal. So I have a femcare company, and it's completely bootstrapped. I've spent a lot of time and effort on product design, development, but I'm getting to the point where I realize to do a full-scale launch and get to the point of having customers, it's going to take a lot more money than I have in my own reserves. So because I don't have sales, I know you guys do pre-seed investment. I guess, what is the best way to prepare myself or a small company like mine to say, hey, we really do, we've got a vision, we've got a great product, but no, I don't have proven sales. What's the best way to position myself to get that pre-seed investment?
Thank you for the question. So, and maybe just to be clear, when you say femcare, does that mean a physical product or?
It's physical product and an education platform together.
Okay. So, I mean, generally, I guess, thank you for the question. The way that I would answer it is maybe similar to if you weren't doing a physical product company but you were pre-launch. If you're building a tech software company or an app and you were pre-launch, the way one is for us to get to know you as a founder, what you're building, why you're building. So more of the story behind it. We're not. I mean, you're learning a bit more about us now here, and we have other different events throughout the year. But secondly, wanting to understand how you've laid out all the different pieces, but probably more importantly, why the opportunity is large. And so again, touching back on the investment memo, depending on your investor, how much relevant knowledge they do or don't have, educating us on why this is a large opportunity, why why your product is unique amongst other competitors. And so you're able to do that in, again, the same materials in terms of a pitch deck and whatnot. But in terms of being pre-launch, if you will, you're going to have to make sure that your team is exciting enough. And I say that not because it's not unexciting, but it's relative to other opportunities. And so again, we're having to compare dozens of companies that are wildly different on a day-to-day basis. And so you have to say, hey, look, this is why I have all of the ingredients. This is why I have the drive, I have the background, I have the understanding to put all of these together with the right capital partners to come on this journey with me. We're going to be able to create this, $50, $100, $200 million revenue company in the next blank years. And I have that vision, I have that drive. Join me on this opportunity if you see that. So again, very similar, more or less. The only caveat now, if there is a physical product that needs to be created, the only caveat there is that the questions that the investor is going to ask will be slightly different, or they're going to want to make sure that your numbers, because at the end of the day, with the company that's generating a product, cash is king. And so understanding margins, distribution. So again, all the same questions, but because you literally can't produce something if you don't have dollars to produce it, that means scale means a little bit, scale looks a little bit differently. And so you want to make sure that you're, again, educating the investors if needed on how you're going to navigate that landscape with the right capital. I know we have 10 minutes left. And yeah, the question can be as specific or as broad as you would like. Thanks for folks who have hung around this far.
As a part of the support, I know you said you're kind of between a cheerleader and a coach. It's part of the support, especially given that it's so early in the process for founders. Is there support as it relates to like IP, trademark, or is that the responsibility of the founders? Like, what is included in some of the support that you all provide?
I'm trying to think about specifically IP. So my team can keep me honest here. I don't know if any of our companies have something that they have patented. Not to say that that isn't a good idea, but I'd say probably the patent is more relevant if you are creating something that's a physical product, or maybe something that's some technology that's never been utilized before. And so in terms of, to answer your question, would we support our founders with that? The short answer is yes. I think that the longer answer would be not questioning, but understanding the merits of patenting in and of itself. And yeah, finding the right support. So I mean, so again, to answer your question, I can't think of any of our portfolio companies that have a patent. And so in terms of our ability to advise you, we will connect you to folks who can give you their perspective about patenting, but probably before that, understanding the drivers of that, the merits of it to begin with. And again, we hear pitches, in some cases it makes a ton of sense to patent, but I think it's more on a case-by-case basis. I'd say maybe the longer question in addition to that is, generally speaking, and my team, probably Eileen can speak to this more if you'd like, but in terms of how we support additionally, it really depends on the type of where the company is in terms of stage, but also team and product. So each company will have different needs, different requirements. Some of them might have go-to-market needs, some of them might have hiring needs, some of them might have business model needs. And so depending on what those needs are, we will directly interact with those companies ourselves, with our team and our expertise, or we will activate our network in a way that can get you the right support, whether that's through our Co network, or that's through service providers that we have connections with. Yeah, please.
Sorry, I'm not on the Slauson Co website right now. What's
worries.
next? How I would love to be able to take advantage of other resources like this with Slauson Co. So what you got next? What can I sign up for?
My team can keep me honest if I'm missing anything. So we have these on a monthly basis. You're more than welcome to continue to join these. We cover different topics. We have different events throughout the US as well. In-person events. Last year we went to Atlanta, Austin, New York, a couple of other places. This year we'll be back in Austin for South by Southwest. We always have an event during LA Tech Week, depending on where you are geographically. And I'm trying to think of other opportunities. Eileen, Waverly, what else am I missing?
I would say you kind of alluded to this, but I would say the best way to keep up to date on other events we might have is honestly to just follow us on social media.
Yeah, and then again, depending on where you're located, I guess, where are you located?
I'm in Long Beach.
Okay, so you're not far from us. Yeah, so we have other ad hoc events throughout the year. Wonderful. Well, I know we only have a couple of minutes left. I won't keep folks here, and I know everyone always loves to get a couple of minutes back to do all the things that you need to do. So happy to do that. But I'll also stick around until 9. So if you need to drop off, feel free to do so. And again, we'll have these on a monthly basis covering different topics. So appreciate folks joining us for this one.